Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's the 5th of December and our guest today is our regular guest, Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, and he's coming out of us from Singapore. Welcome to the show, Vishnu.
Hi, Brian. Thanks for having me. Like I say, there's no better way to start, or rather head into the middle of Monday. So good afternoon.
Now, Vishnu, for a start, we had a better than expected non-farm payrolls number, which numbered 263,000 last month, with an unemployment rate which was unchanged at 3.7% in the US. Talk us through what that means for markets as we head into the first half of the day.
I'm afraid I can't do what you tell me to, Brian. I have to do it slightly differently. I'll tell you what it was supposed to mean for markets, and then I'll tell you what it ended up meaning for markets. So if you take that alongside, so you're absolutely right, it was a stronger than anticipated number, and you take it alongside wage growth, which also re-accelerated. What it should have meant for markets, particularly given that markets have been, being quite exuberant about the fact that the Fed is going to dial back its amplitude of rate hikes. What it should have meant is markets then get a bit more cautious, wondering whether or not such hot jobs market number means the Fed may raise rates higher than earlier calculated or calibrated, and then hold it for longer. And initially, that sensation did come through because equities buckled, yields went higher, but then markets suddenly decided, you know what, that's okay. We can make a Goldilocks out of this. And they decided that it's not going to change the narrative of a Fed looking to end its tightening cycle in coming months. And they pushed through to set the stage for a center rally for the rest of the week. So they pretty much shrugged off strong data, but they continue to latch on to any signs of getting towards a pivot, even if they're not there. So in a nutshell, markets are in a place where they want to decipher anything that comes through as a reason to be upbeat. And I think that's really where they are happy to trade bad news as good news. By that I mean bad data as good policy news. They're not so quick to trade good data as bad policy news.
Now, Vishnu, I want to take a different slant and look at some good news. So there's some good news out of China that they've been easing in terms of COVID restrictions. Tell us about that and what your thoughts are.
Well, I think in fact you're right. I mean, as much of a innate pessimist that I am, I have to admit China's policies have surprised on the very encouraging side, not just with COVID, but also before that with their 16-point property measures looking to really ease up and so try to reinvigorate the economy. With COVID, you can also see that either through direct actions or indirect or somewhat related actions. So on one hand, I think there's some
Sorry, Vishnu, I lost you there.
But equally quick to ease up. So there's so they're telling authorities to not just be quick to lock down, but also very quick to ease up. So they want economic activity recovered. They're also hastening the timeline to get seniors vaccinated. And that remains quite important because that suggests that the timeline for reopening is is closer than anticipated. Our own warning on this is there are three aspects of reopening. One is the internal activity thresholds and triggers for locking down should there be an outbreak of cases. Then there's the inbound tourists as well as visitors, and there's the outbound. As much as we hope that all three coincide, they need not necessarily be perfectly aligned. So we need to watch out for a lot more details on how China wants to tackle this. And at the end of the day, we also want to be somewhat more guarded on timelines because heading into winter and ahead of the March policy announcements, China may not completely loosen up all the restrictions it has in place right now. So we need to wait out for the vaccinations to come through, for it to take effect, and for China to reassess heading into the early part of next year.
Now, Vishnu, I want to temper what you've just said with the fact that there's actually a lot of bad data out of China so far. So US manufacturing orders are down 40%. So essentially alluding to a demand collapse. Then on top of that, so US container volume was down 21% between August and November. And interestingly enough, Chinese factories are shutting down 2 weeks earlier than the usual, ahead of the Chinese New Year holidays. All of this is going to flow through to the numbers. So that's something I think that investors should be looking at, because those numbers paint kind of an ugly picture.
You're absolutely right with that, Brian. So I think even as markets are celebrating a lot of the optimism, I think the understanding here is they will have to grit their teeth and sit through more bad news to come. So it's going to get worse before it gets better, just given in terms of activity where China is. There is, and this is for the die-hard optimists out there, there are some flecks and linings of good news, and I think they can spin the Chinese New Year as a good news, because if China is going to remain locked down during winter, they much rather the close downs or the closure of the factories for the Chinese New Year break come earlier rather than later, and they're hoping that the resumption of that of activity into February and March places them for a much better rebound. But I think your point, it doesn't in any way distract from your point, which is, will global demand pull back significantly in 2023, in which case a lot of the optimism probably needs to be tempered. And this is something we're watching very closely as we try to sift through the noise of just COVID-related slowdown in activity.
Now, Vishnu, final question. With the start of the week, what are key data points and events this week that we should be looking out for that could move markets?
I want to do the relay with you. So earlier you mentioned US ISM manufacturing. So US ISM services are going to come out. Along with that, later in the week, you'll get the University of Michigan survey. Here, not just the sentiments, but the inflation expectations embedded within the survey data are also important for markets to watch. But as we discussed earlier, maybe they would find a lot of consolation in softer expectations, but perhaps not really brood over higher inflation expectations. We don't know. Let's see whether the center rally obfuscates the data, indifference. And what will happen is later in the week, during the week, we also have got the Reserve Bank of Australia. We anticipate, like most of the markets, that they'll do another 25 basis point hike. If that's coupled with a lot of optimism about China reopening, that can give some strength to the Aussie dollar. The Reserve Bank of India is also meeting. The consensus is that they're going to step down from previous 50 basis point hikes to about a 35 basis point hike. That will bring their rates to 6.25%. RBA would have been left at 3.10%. We are also on board with that, given that inflation remains sticky, and even if they are worried about demand, they can't take their eyes off the price stability ball. A lot of this can actually come out as positive for Asia, especially if it's against the backdrop of a softer dollar for most of this week. But the warning there remains, and that's twofold. One is the underlying risks have not dissipated. So certainly next year, some of this will carry forward. The second one is, even as we go into the end of this year, given a huge down leg that's recovering this month, some of the more cautious players may want to lock in some of their profits before they go off for their year-end holidays. So a Santa rally may not make it to the New Year or New Year's Eve party either. So we want to watch this space quite closely.
Vishnu, as always, thank you very much for your insights. Thanks for coming on the show.
My pleasure, Brian. Thanks for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This interview will be on our website as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.